The highlight of the week, especially now that the debt drama is out of the way. We're just 9 minutes away from the data, the U.S. jobs report, unemployment change, and etc. So a bit of a briefing on what happened so far this week and overnight. As we announced this morning, and maybe you have seen in the news, finally the debt ceiling deal has been signed off from the Senate as well. So that we can say that the default from one of the largest economies in the world, US, has been avoided. So that improved a bit the stock market sentiment, and that explained the spikes that we have seen and the boost that we have seen since yesterday night and so far today for the stock markets in general globally, in US, in Asia, and in Europe. So, however, just okay, I have confirmation that the sound is good. So, as I was saying, stock market sentiment improved. We've seen some spikes and some support to the stock market, and this remained the case so far today ahead of the US jobless claims. In regards to jobs, I will share also the calendar. I think in a bit actually, it's quite early. We're still 7 minutes away. But in general, the jobs this time are facing some kind of a downside risk. Okay, considering the ADP number, considering the weekly jobless claims that we keep getting every week. There is it is expected what is expected widely expected is that we might see the so far tight labor market to to moderate a bit, okay, to moderate a bit. So that is something that this scenario, let's say, or this possibility has rose from the initial and continuing claims that we're getting on a weekly basis, as I said, but also the consumer confidence, which has moderated into as we moved on to the second quarter. Actually, in the second quarter of the year, producer sentiment also a bit weaker in weaker levels, and all these have added to a downside risk, as I said, for the jobs. Before I share what is expected and what is not, I will share also my screen. This is your session, as we keep saying. So you cannot see me, obviously. Okay, now I'll fix that as well. So all this uncertainty around the debt, and it's not only that, but let's take it one by one. All this uncertainty around the debt has actually managed to boost, to pressure, to support initially the dollar. However, after this has get out of the way, we've seen a pullback, some kind of a cash out, or market participants to get out of the safety of dollar. Okay, and that explains a bit the decline that we have seen since yesterday on the dollar index, even though it's a decline that mainly yesterday was consolidated for 5 days in a row around 104 area and turned down to 103.50 and closed below that yesterday night. and so far today is holding at that level. So dollar has what we've seen in dollar right now is a bit of a correction, okay, a correction as there is some kind of a confidence in the global economy, and ahead of the NFP as well. There is some pressure on the dollar since now the speculations that the Fed will pause in June um, prevail in the market, and that um, is what has caused this bit of a decline. So it's all about the banks in the end. Now that the debt is out of the way, now the attention turns to the Fed. But jobs today will give us more clarity on whether the July hike is still on the table or not. Now, what's your question again? Sorry, I forgot what the. Let me find your question again.
Gold.
No, I was going to go. Someone. No, it was gold, and it was going to be strong. Yeah, I started vice versa. Is the dollar? Is the dollar going to be strong for the time being? It is it's quite supported, not well supported, I would say quite supported, but you can see that the momentum, regardless of the decline, momentum is still positive, with MACD well above zero and RSI at 56 flat. So it will be NFP is quite crucial today, okay? Because is what I said initially, it will give a clue in regards to the Fed's rate hikes. So far, the case was for two rate hikes, June and July. After the debt drama is gone, after some data such as there was a week full of data, actually. It was ISM manufacturing, weakening below contraction. We had jobless claims. We had ADP this week. We had a lot of dovish speeches. All these, consumer confidence, all these managed to reduce the odds for a rate hike in July. Okay. So now this is the final data release that could give further clues on the Fed's meeting for the 14th of June at dear Jerome. So yeah, it looks like the market are actually the markets are right now um, um, already pricing that there will be a pausing of the tightening policy. The data are out, and I was just speaking of them without sharing the calendar, which is where is it? Ooh, God, Jesus Christ! I want to share this with you. 339,000. So nearly 70,000 more than expected. Than last month, and nearly double of what was expected. Let me share the calendar with you. Come, Andrea. Oh, sorry. Oh God, I will zoom this on and I will show you. 199,000 was what expected. It came nearly more than 80% higher actually, and then no, what I'm saying actually nearly double. Let's say it revised higher as well. So April's reading revised higher. So still, yes, as Stuart is telling me right now, it's hot. So that's not good news for our friends in Fed, pretty much. This is not what what was expected. I mean, considering all the data that we've seen the last 2 weeks, we're expecting that the labor market will cool down a bit. Will start slow down a bit, but that's not the case. Average earnings They did. The headline was 4.3, then 4.4. But what about the monthly reading? Monthly reading, not 0.3. Okay, indeed, the average hourly earnings, the wages, they came in line with expectation, revised lower as well. Unemployment increased, but but the payrolls is still presenting a really solid labor market and I mean, it's like the tightening policy is not going to affect the labor market in the US. It's not cooling down, and even though the dollar hasn't reacted significant, I would say for the timing. Let me put the 30 minutes chart on and see what's going on over here. Come on. Gap up, 103.16.8. A lot of indecision, as you can see, because it was a big surprise. So, okay, 103.57. Let me see a bit if the breakout of the data is already out. But
that's like the unemployment rose quite significantly, 3.7%.
Yeah.
Caught like cool the exuberance.
Yeah, the only thing. Yeah, indeed.
Still hold up, I think.
Where is it? The calendar. I missed my calendar. So 3.7% unemployment. So unemployment is keep rising. So that's unemployment is still rising. That's coming in contrast with the revision higher and the spike in the payrolls. So that might explain this indecision on the market participants for the dollar index. This is a 15 minutes chart just to avoid any confusion. 30 pips higher, nearly 30 pips higher on the data release. That's bad news for sure, but let me just see whether that thing is going to sell. Please zoom on the screen. Sorry, you're absolutely right, Rusman. This is my 15 minutes chart. Initially gapped up on the release, but right now, by closely monitor the data, we've seen that there is some kind of a bearish pressure for the dollar index as well. Yields also rose. What we have over here, let me just, okay, unemployment, let me just, participation rate remains the same. So the focus is on wages and on the payrolls.
Yeah, it's up quite
So yeah, unemployment is definitely up 0.3%. Yes, Australia is telling me right now. Okay, let's. So this, I'm not sure whether this. I think, I think I think we are definitely in pre-pandemic levels in regards to the hourly earnings. If I'm not mistaken, it was 3 plus, but yeah. So prior to the pandemic, the growth in hourly earnings was gradually climbing from 2% to 3% until the pandemic, and now we are at 4.3% for the headline. Okay, that's definitely not good. That should spike the odds for further tightening policy. So the fact that the claims have tightened in May. The consumer confidence has moderated. Producer sentiment was oscillating around weak levels. It's coming in contrast with the payroll report today. Definitely in contrast. So let me get back to your questions. Fine, that was zoom in. I think it's going to sell gold, NFP, dollar, yen, gold. Okay, guys. Okay. So okay, let's put an end on the dollar index because before we move on to gold, dollar, yen, oil, and then what else did you ask? Yeah, that was it in regards to the. So now, if what I'm seeing right now in the headlines is correct, before the data were out, the odds for a Fed hike in June was around 29%. Now that definitely has changed, and it will be interesting to see where we're standing right now. So this is, as I'm reading in my headlines, this is the 50th consecutive time that the report has beaten the economist consensus, the economist
14
forecasts. 14.
14 consecutive.
14 consecutive, 14 or 15. That was so 103.40 $4 right now. The immediate floor remains the floor of the day at 103.29. A lot of indecision over here, and some neutral, mixed actually, I will say, intraday momentum, shorter momentum in the 15 minutes chart. So 103.30 remains, 103.29 remains the floor, the immediate floor, which in case that we've seen the asset extending lower because it's the end of the week, let's not forget that as well. So a break of today's bottom could bring to attention the round 103 and 102.75 level. Okay, use your pivot points, use your fractals or your indicators just for identifying some immediate support levels or the latest swing lows and swing highs. So nonetheless, let's shift quickly to gold and see how the safe havens have reacted. Dollar yen, and gold. So gold, okay, a bit of a muted, I would say, reaction in gold. Remains remains within the range of the day, as you can see. Can you see? Let me double check. Yes. Remains within the range of the day after this rally yesterday at 1983 level, 1983.36, remains above the pivot of the day, above the 1972 territory. A bit of a muted reaction with the momentum remain neutral, indicating the continuation of a consolidation for the gold, at least for the time being. This is what we can see. There is no indication of a reversal or further spike. So possibly everything will depend on the dollar movement. But yes, ranging 1971 already breached, not broken, and now the asset has continues to remains to steady in this area that has been since last night. Very quickly, the dollar again, just to see what's going on around the market and how the markets have reacted initially. There's a lot of indecision. Possibly the markets don't know how to react on this on this report because the headline so far and the expectation was for a downside risk, but this is absolutely the opposite happened actually. So okay, dollar again back after spiking up to 139.45. Now it's back to the open price and to 138.90 level. So flat Bollinger's, flat moving average, flat MACD, a lot of pressure for both sides and a lot of mixed sentiment. This is what we are getting so far. Maybe we should wait a bit the markets to calm down, but yeah, let me see a bit the questions again. NFP, what are expecting to dollar, gold continues to rise for a full week. Yes, overall, dear Rushman, indeed it has been a quite positive week for gold. But let's not forget that remains on the lows of the last 2 months. So if we check the overall picture over here, indeed gold rose this week. However, it closed at May's lows, and it remains at the lowest territory that I have been since the mid of March. Okay, a big candle, a big barrier is still the 2000, let's say the 2000 level, even though this 20-day moving average looks to provide a very strong resistance for gold over here. I'm referring to 1983 level, 1985. Let's round it up a bit. 1985. Momentum is negative. The price don't forget that the markets have already started pricing what will happen in the next few months, and the fact that the global stock markets, the global central banks should start pausing and even pausing the tightening, or will even consider some cut rates. And that is what is actually that is what actually could affect significantly the gold. But yes, indeed, a positive week, but the overall picture doesn't change for gold. So 1985 remains a key resistance because it could imply a breakout above it. It could imply to a reversal back to the upper Bollinger Band area and the retest of 2000 or even 2013 territory. But this it doesn't comes in line neither with the fundamentals, neither with the momentum. So this looks to be some kind of a safe bits on safety due to the uncertainty that we were getting from the US and the possibility of the default. So this looks to be a limited bounce. Okay, limited bounce for gold. Keep an eye on 1985, which is the 20-day moving average, and on the flip side, 1960, it could be an immediate support level, which, if it's triggered and even broken, it could open the doors again to the lows of to the latest lows down to 1920, or even lower to a possible retest of 200 moving average, dear Rushman. So intraday, as I mentioned, a bit of a muted impact. Now the markets are keep pressuring downwards the gold, but we still have another 15 minutes for this candle to close. So let's wait and see. Okay, guys, I will get back to gold as soon as this candle closes. Let me see. Regards to the giveaways, guys, just follow our social media. I have no idea about the giveaways. I know that we keep posting giveaways and contests, so please follow in order for you to be up to date with all the giveaways that we offer. Dow and NFP, actually. Okay, let's wait and see. As I said, the stock sentiment was the stocks are actually well supported since yesterday night. Something that helped as well, it was the China and the headlines in regards to supporting the real estate sector as well. So Dow Jones 33,327, breaking all the resistance areas of the days, extending higher, reversing nearly 4 days of losses, and even extending above the 20-day moving average. Here we are, 20 above the 20-day moving average. However, just to zoom out a bit, it's a Friday, it's the end of the day of the week, and we still need to see a confirmed breakout outside of this 1 month down channel, and a breakout of it, a rejection of the 20, a rejection of the 50-day moving average in order the US indices, and in this case the Dow to change from a bearish market into a bullish market. For the time being, remains within a down channel, and this looks to be a correction from a technical perspective, and some near-term momentum, bullish momentum, due to the tech sector, mainly the tech sector, and the politics. So second day in a row to the upside, but at least before you start, before the open again on the Asia open again on Sunday, so early Monday for some of you. So until then, what you should see is how the Dow close the day, close tonight, how we will close, and whether we manage to break above the channel and above the 20 and the 50-day moving average over here. So intraday, up, boosting higher. Intraday, the positive momentum remains. As you can see, the fast moving average pointing higher. It seems that the momentum intraday has not run out of steam. MACD keeps rising, RSI the same at 72, but points higher. Can you see that? The same stands for stochastic. Initially show a bearish cross in the overbought territory, but now is ready to, it keeps pointing upwards and is ready to provide another bullish cross on the overbought territory. So it seems that there is still some room to the upside for dollar again, with next level to be seen, the 33,400. So we're here, yeah, 400 territory. What ATR is saying, ATR is at 40.68 within this 30 minutes chart. 40.68, that means somewhere, let me just find 40.67, somewhere here. Now, gold, free fall. NFP, can I trade currencies? You can trade anything you want, dear Gebidi Tsemank. Please have a look on our website and see all the trading instruments that we offer. Let me check. Let's get back to dollar, guys, to see what's going on over here. Yeah, this dollar got stronger again. Still momentum. It's bearish, so it has been stronger in the aftermath of the report, but remains, and it holds at the high area of this session, but still under its pivot point. Still, we need to consider that regardless of the payrolls and how the surprise that that we got from the non-farm payrolls and the fact that it was nearly double of what was expected, the focus is still on the higher unemployment and the lower wage growth. So this is adding some kind of a ceiling and pressure to the dollar. So, and it's quite interesting to see how the Fed could interpret this data, because even though this is a really, really hot reading, the fact that there is a higher unemployment and lower wage growth could be enough for Fed to consider
In June,
in June. That would be key. June meeting will be key, whether they will pause or not. Yes, to wait for longer or something. Let's wait and see. That is definitely adding some uncertainty around the June meeting. It's this mixed report that we got today. Okay, inflation in US is still the most important data, but which is no, it's not next week. So inflation from US is a day before the FOMC. Okay, so let me get back to your questions. Guys, this is your session, so let me know if you need to ask me something. If you have any question about anything, please stick it below our broadcast, either in YouTube, in Facebook, LinkedIn, etc. So I'm here to help. Oh, someone asked about cable and I missed this question. So what we have over here, 125.43 was the high of the day. A pretty cable, I would say cable was the biggest beneficiary asset pair this week. Sorry, it was I think it was the one that outperformed the most. 125.43 is the high of the week, the high of the day, and it managed to revert nearly 2 weeks of losses. Went back to the upper Bollinger Band area, above the 50, above the 20-day moving average, with a bullish cross also between the moving averages, indicating that the momentum has changed in the cable, and it could return back to the highs of May, back to 126 territory. So, sorry, wait a bit. So, in regards to cable, a bit of a pullback. Few hours that started a few hours before the data. However, the fact that cable holds its gains above 25, it implies to some limited pullback over here, as long as we see the asset holding above 125. Intraday, let me get back to the 30-minute chart. We can see that the momentum has actually turned into neutral intraday, But as you can see, there is not further steam to the downside for cable. So if indeed we see the asset held in above 25 and holding above it until the end of the day, then that could confirm the or could indicate that cable could get back to May's highs. For the time being, we are getting this 30 minutes chart, a bullish cross from stochastic. The rest of the momentum indicators are a bit mixed, neutral mainly. MACD at 0, RSI below 50, but the slope is very narrow, indicating that there is not a lot of pressure to the downside. So this looks to close unchanged, and by unchanged I mean to close back to 125.20 territory, 125.15 maybe. So holding within this range that we have seen since yesterday during the US session. So it could it could return back to this range in market and holding the gains of the week. Just am I missing anything about? No, for the time being, no. Okay, let me get back to your question. So, dollar, yen, gold, Dow, gold. Let's get back to gold. Another 2 minutes to go. Broken below pivot. Let me just let's clear the screen. What's this? Okay, this it was the cable. It was pound dollar. Now I have turned back. I've returned back to gold. Mansa. Okay, this is gold 30 minutes chart. Okay. Did you have a trailing stop, dear thumbs up? I don't know. I need to see what you're talking about. So 1970, 60 for gold right now, broken the low of the day below pivot. We have another minute to go, however, and I would be very curious to see how that ends. But momentum is still positive, so still this looks a bit limited pullback. But let's wait and see. Euro dollar and Nasdaq. We've seen Nasdaq. Okay, actually, the candle just closed. So just a quick look at what happened over here. Broken the this is back. We are back to gold. Okay, I'm gonna so avoid any. Okay, look at that. Let's see. Big decline, a pullback of around $11 dollars for gold over here, extending down to the pivot point of the day. Okay, reverting nearly half of the gains that we have seen yesterday. Am I correct? Let me double check. Yes, nearly 50% of the gains that have been seen yesterday, and currently extending further to the downside below the pivot point. So, however, this is still a strong support area. This area, the 1960 area. Here we are. Let me just 1965. Okay, stochastic sharp, quite a very sharp slope in stochastic. MACD turn negative, but the signal is still positive. RSI lower, close to 30 territory, and that was a huge candle with moving averages keep pointing lower, Bollinger's extending lower. So we need to keep an eye on the 1968 and 1965 as immediate support levels for the short-term 30 minutes chart. Yes, that it comes in line with the overall outlook. However, we need to see asset breaking and returning back to Monday's lows in order to suggest that the overall downwards of gold has been resumed. So, just a bit of a summary on this. Let's get back to the 30 minutes chart. On this 30 minutes chart. So, broken the range since yesterday, extended lower, broke the pivot point of the day, remains actually within the 38 and the 50% retracement level. So this is a key support area to be seen. If we see the asset closing tonight below that level, that could open the doors to 1960, 1950 territory in general. It could signal again the resumption of this down leg that we have seen the whole May, and the return back to the 1920 lows. Okay, let me get back to euro dollar. Hefty gains. So everything depends on the yields and the dollar, guys. Okay, everything that we are seeing, dollar, yen, euro, dollar, gold, cable, is due to the spike that we have seen initially on the treasury yields, and the decline and the boost initially on the dollar as well, that led a boost on the dollar as well. But as now the breakdown of the report present a pretty mixed report, and it will be tough to know whether the Fed will interpret this as a hawkish or a dovish report. This could keep the dollar within the 103, in the mid 103 area. So let's get back to euro dollar. Euro dollar, ask for it was double. As a bit of a pullback from 107.78 down to 107.34. But my dear friend, everything looks neutral. I mean, again, consolidation might continue. Look at this. Let me zoom in. Can you see that moving averages over here, the fast ones? We are in a 30 minutes chart, okay? Fast moving averages have flattened, so they pretty much show to the right hand side. The same stands for Bollinger's, flatten as well. Mark this at 0.48. Is getting higher away from the low level, from the 30 area, so pointing higher, but still at very close to 50. So it's at 49 to be more precise. It's at 49, so neutral it is. Stochastic over here just posted a bullish cross. indicating that this decline that we have seen for the last 2.5 hours, it has ended, and the asset could turn back to where it was actually since yesterday, in this very, very narrow range at 107 70, 107 80 territory. Overall, let's get back to overall, as you can see in the dollar, in the euro dollar over here, euro dollar it has been to the downside, in a downtrend, in a quite sharp downtrend actually, since the beginning of May. So overall outlook remains negative. A key with I would like to zoom in a bit. This is a daily chart. Okay, so very interesting is this crossing over here. This is my 20. With gray I have the 20-day moving average, with blue I have the 50-day moving average. This crossing of 20 below 50 comes in line with this 1 month decline, with the negatively configured MACD, with the consecutive lows in the RSI, indicating that there is further pressure for euro dollar, and with the asset, as long as the asset as well had done several attempts since last week to extend above 107, but it failed. All these indicate that the downtrend remains in play, with immediate support at the, here we are, is the 200-day moving average, but also the lows, the May's bottom over here. Okay, so intraday pullback, however, already recovered some losses, so neutral and further consolidation might be seen intraday for euro dollar, as long as it remains below the high of the day in the 107.80 level. Overall, the negative outlook remains for euro dollar. So it's not clear. Ahmed, you cannot see. Is it your? You cannot see clearly my screen. Too small. You can't tell it's too small, can you? The screen is a little too small. It's as wide as it can get, I'm afraid. Since you are in YouTube, Lawrence, can you click? There is an option to take the full screen. Can you do that for me, please? Can you put the full screen in YouTube? Click the full screen option. Nasdaq, yes, sure. Nasdaq. Let's get back to Nasdaq. Actually, you see, it seems that now there is a reversal on the in general in the market, the reversal of that initial reaction from the data. So Nasdaq, well known as tech-heavy index, extended further gains today, and actually is back to 14,560, with the momentum holding positive. I would like to remind you the NVIDIA story, the NVIDIA earnings, and their AI, artificial intelligence products and services, something that in general has benefited the tech sector, and as a consequence that impacted and supported quite well the Nasdaq as well. So overall, we have seen dear Jeremiah, the Nasdaq, the USA 100 reverting, actually bouncing and extending back to last year's, to March 2022 territory. So momentum is still rising. This is a weekly chart, and why I put the weekly chart is just to show you these consecutive bullish candles, with the asset today holding those gains for 3 weeks in a row, and momentum keep rising to the upside. So right now the weekly chart looks a bit over bought. Okay, we might see this week a bit of a muted, a bit of a dodgy weekly candle, as a bit of the need of a bit of a correction. It's already overbought. It's an extreme level, and it might stabilize a bit. However, still well supported, still positively configured, with overall outlook indicating for a reversal back to, or a possible reversal back to April's highs, April 2022 highs. So the very next immediate key resistance area for Dow is the 15,300 territory. Okay, this is, if I'm not wrong, it looks like it's like 68%. No, it already broke the 61.8%. So it already broken and extended so far today above the 61.8% of the 2021-2022 down leg. A significant breakout, a significant boost higher that could open the doors above 15,300. That's the overall picture, in the medium term picture. So intraday now, intraday again neutral, hefty gains, as I said earlier, holding close to the highs of the day. But this is the 1 hour chart, by the way. Everything has flattened, including our moving averages, including our momentum. Everything looks neutral, steady. So you need to keep an eye on the highs and the lows of the day. But so overall positive, intraday positive, but neutral for the time being. Is that clear, Jeremiah? Nasdaq 0.23% higher, S&P 0.44% higher. Again, didn't manage to extend as high as Dow, but it's back to July 2022 highs, breaking this year's resistance. And extending higher. What else we have over here? Let me check. Let me check a bit the headlines as well. Indeed they were, my dear Samuel, indeed. It's very difficult right now to speculate what the Fed will do, how they will interpret this data, and what kind of whether they will whether
The
would
June
be
rate coming, whether it'll stall in June or go in July.
in July.
Yes. Yeah, it could still go in July, yes. Because that's still strong jobs.
So Stuart saying that the July high could be still on the table, June and July.
No, June.
But sorry, June. So July
June
pausing.
But yes, July.
July pausing. Okay. Yes.
What was that?
Yeah, still a strong report. So they might ignore. You see that you're seeing the unemployment and the wages.
That's why the dollar hasn't taken off. I think.
Yeah.
They've obviously had some impact. It's the unemployment for me. It's the unemployment rate
Yeah.
rising quite significantly.
Yeah, unemployment, that's for sure.
Reaction
Very muted reaction, very hefty. Dodgy.
So, stagflation still on the cards.
I didn't mention that. You're absolutely right. So stagflation is still on the cards. If you haven't heard Stuart
Sorry.
next to me, dear Samuel. Yeah, Samuel. Okay. As I keep saying, intraday, what you're seeing intraday, this setup, it contains the usual 50 period moving average, and also and Bollinger's, the default setting of Bollinger's, MACD, RSI, default ones, stochastic 533. But this yellow and green line are the 5 and 9 exponential moving averages. Okay, this is a setup for the intraday. This is an intraday setup for higher time frames. This is what I usually have as my setup in a daily chart, sticking with this RSI MACD by default, the default settings, Bollinger's and 50 and 200 day moving average. It is dollar index. It is dollar index. Sorry, seems that you're struggling to see this. Yeah, but it is dollar index. It is dollar index. So just hovering around between the 103 and 103.70 territory, dollar index. I mean, what market? Yeah, this is dollar index, as I mentioned. This is dollar index, guys. Dollar. You keep asking about. Let me write it down. Okay, this is dollar index. Now I've used the daily chart, and you can see that we still are well above not only the 38.2 Fibonacci level, but also the well above the March, April's highs. Okay, nice floor over here, nice floor at 103 level with the 20-day moving average keep expanding higher away from the 50-day moving average. Bollinger, even though it shows a bit of a MACD, it showed a bit of a decline, a slowdown, however, remains well above zero, indicating that there is the dollar index is still well supported overall. So that would be a key floor for dollar index intraday. As we said several times in this session, the mixed report led to this hefty doji moves in the dollar index and in general muted reaction in the markets in general. With the dollar index intraday, this is the 1 hour chart, with the dollar index intraday holding in the same areas, in the same range that it used to be since last night. That was pretty much it. Let me see whether there is any further questions. What's your buying level? Cannot tell, Samuel. Cannot tell. But what I can tell you is the immediate support and resistance levels with the and you decide yourself. Okay, look at that, 103.30, key floor since yesterday night, consecutive attempts to break that level overnight, but failed, jumped on the release, failed to extend above its pivot point, quickly reverted down, closing this gap. You see all this. closing this gap and extending back lower. So 103.30 remains a key support, which if it breaks, it could turn the attention to the around 103 level or even the 102.75. However, a failure of breaking the 103.30 level could hold the asset within this consolidation, within this narrow range. In regards to a possible upside move, we need to see a move above its pivot point if we're speaking in intraday analysis. But if we solely focus on this down leg that we have seen since yesterday, then is just be precise, 103.80 is an area that it coincides with three important technical indicators: pivot point, 50 period moving average, latest swing over here, latest fractal, and the 38.2 Fibonacci level. Okay, we cannot give signals, I'm afraid. It's not allowed by the regulation. So yeah, but what you can do, dear 1D, we offer auto chartists and advanced insights that they are signal tools. Okay, then you need to meet some terms and conditions, but auto chartist is free, but there are some terms and conditions that you need to meet. So navigate a bit on our website, and the auto charting advanced insight is a signal. They are signal tools that you can use in your daily trading. Okay. Yes, we do. Samuel, but can you please contact our support team or check the partnership schemes in our website? Okay. So okay, if there are no further questions, I will call it a date. So yeah, so new the reaction, we said that. The labor force participation remain at 3 years highs of 62.6 for a third month. Jobs report, a pretty common pattern since 2022. Big gains, but downside work week surprises in the hourly earnings. I've seen that the yield, the bear flatten, yes, here it is. The bear flattener has inverted the curve the most since March. So yields spike, dollar initially the spike, dollar steady right now and went back to the 103.40 territory. In general, the Wall Street futures and stocks markets in general extending gains. Gold recovered the initial gains from the report and is back to 1974 area. So consolidation is what expected from gold as well within the range of the day, between 1975 and 1985. No one asked about oil. Just very briefly before I close the session. Very briefly, oil. Another key mover the last 2 days. So extending higher, 72.13 is the high of the day. This is a daily chart just to show you the body of these daily candles. Obviously, the day hasn't. We're halfway of the day, so we need to see how the oil will close the week. But broken the 20-day moving average and extended lower return to 72 level with intraday bias positive. So bulls are still in control of oil, as you can see. The momentum the momentum and the moving average over here, I keep pointing to the upside. So 72.13 is the high of the day, with the next resistance for oil back to 26th of May, 26th and 29th of May, and the 73 territory. So yeah, like the extending RSI looks like there is further steam to the upside. It's already 75 and rising. Moving average, I keep pointing higher. Stochastic just posted another bullish cross and is not oversold yet, as you can see. So there is still further room to the upside for oil. If not up to 73, the next immediate support level for intraday traders is also this latest swing over here at 72.50. Okay. That's pretty much it, guys. I'm gonna call it a date. Thank you very much. Samuel, yes, we covered gold. So as soon as I end the session, you will be able to see the analysis in gold. But I think I just did it, didn't I? Yes, I just did it. Sorry, I missed your comment. Yes, I just did it. So yeah, intraday positive bias for gold. Corrected already from this pullback, and is looking back to the range of the day in the 1980 to 83 territory. Overall, however, gold remains in a downwards trajectory as long as it doesn't manage to break above the 20-day moving average and the 1990 territory. So thank you very much. Have a great day ahead, and we'll see you again next week. Have a great week ahead. Great weekend ahead. Sorry. Don't forget this OPEC on Sunday. On Sunday, OPEC Plus meeting is on Sunday. So that this is something that it could impact the oil, the energy market in general. The energy market open. So keep an eye on the OPEC Plus minutes as well over the weekend. So that because this is something that could affect oil as well. And whether because we keep having some mixed signals from the OPEC Plus officials, so members. So let's wait and see. Have a great week ahead. I'll see you again next week. Thank you. Bye bye.